Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. China presses the button on more stimulus. Asian stocks and US futures rise as the central bank cuts a short-term policy rate, with investors hoping for more from a rare briefing tomorrow. Scholz dodges defeat. The German Chancellor's party scrapes a win in his home state and Brandenburg, narrowly holding off a surge in support for the far right. And Michel Barnier's cabinet appointments sparked discontent from across the political spectrum, putting France's new government at risk. That as the French PM dangles the prospects of tax hikes to cut the deficit. So China coming through with additional stimulus, cutting those short-term rates. And here's what's important for investors looking ahead to that briefing from key regulators tomorrow. We'll break down the China story for you and how that's tying in to optimism across these markets. US stocks ended the week in positive territory. It's a week of gains. European stocks were modestly lower by the close of play on Friday. Currently, this is the setup then. European futures pointing higher by around 0.4%. Here in the UK, the FTSE 100 looking to add around 27 points. The S&P, in terms of US futures, pointing higher by around 0.3%. NASDAQ futures also in positive territory, looking to add 111 points. Let's flip the board and look cross-asset then. We've been hearing from Chris Waller of the Federal Reserve, keeping the door open to another 50 basis points in terms of the cuts from the Fed at the next two meetings. Certainly traders are expecting at least one of those meetings to come through with another jumbo cut. You're seeing 70 basis points move lower in terms of the cuts being priced in by these markets at this point. In terms of cross-asset then, euro-dollar at 111. We're looking as well at what's happening in the oil space with the concerns about the tension between Israel and Hezbollah, and oil currently in positive territory, up 0.8% so far in the session at $75 a barrel. Gold at a fresh record at 2,629, adding 27% year to date. That's the gain. Bitcoin also in positive territory at close to 64,000, up a full percentage point. Let's check in on the Asian markets. A positive session there as well. Japan closed for a national holiday, but the focus very much on what is unfolding in China, stepping up the support after data suggesting again in the month of August the challenges around the world's second largest economy. The MSCI Asia Pacific then, that's the regional benchmark, adding 0.2%. On the mainland, the CSI 300 adding 0.6%. The Hang Seng Index over in Hong Kong up 81 points. And the Japanese yen softer again, potentially heading to 145, 144 after Governor Ueda suggested he is in no rush to push ahead with further rate hikes. That came in through, of course, the end of yesterday at that BOJ press conference. Let's cross over right now and check in on the details around China. Cross over to Hong Kong, where China has announced those plans for a rare briefing by the PBOC governor on Tuesday, following the central bank's move to cut one of its short-term policy rates, as I mentioned. For the details and the market reaction, let's bring in Bloomberg's Min Min Lo in Hong Kong. Min Min, what do we know about the measures being pushed through by the PBOC and what to expect tomorrow?
Yeah, we don't know yet. Well, it's quite a surprise announcement that the PBOC Governor Pan Gongsheng is going to hold this special press conference tomorrow with a couple of other officials from the National Financial and Securities Regulatory Commission. And the topic at hand is to look at financial support for the economy. And certainly markets are pricing in a lot of expectations right now that maybe those stimulus that traders have been hoping for could be announced as soon as maybe tomorrow. If you look at the 10-year government yield, that's down to a fresh record low of 2.03%, suggesting that traders may be expecting rate cuts. And this comes after we had seen the PBOC announcing a surprise rate cut to the 14 days reverse repo rate by 10 basis points from 1.95% to 1.85%. But look, some analysts are saying don't read too much into this, because it could just be a catch up with the 7 days reverse repo rate cut back in July. And remember, the PBOC did not move the 7 days reverse repo rate today. And it's not unusual to cut the 14 days reverse repo rate before a long holiday like the Golden Week next week. The last time China did that was back in February ahead of the Lunar New Year holiday as well. And the intention is to ensure that market liquidity remains ample during that long holiday. We had some disappointing data that came out on Friday, the record high youth unemployment rate, fiscal spending lagging as well. And that's why perhaps we are seeing the government finally responding to calls for more stimulus measures.
OK, Bloomberg's Min Min Lo in Hong Kong on the expectations around that briefing tomorrow from Chinese regulators and the move to lower some of the rates at the short end, at least from the PBOC. Min Min, thank you for the details. Let's get more in terms of the market reaction. Bring in Bloomberg MLive strategist Mark Cranfield. Mark, talk to us about the market reaction to the data. Is it justified? We've seen time and time again that policymakers have edged towards rhetoric around more stimulus. More measures have been put in place, but in terms of pulling out the big bazooka, they've been reluctant to do that.
But of course, they're also getting a helping hand from the Federal Reserve by lowering interest rates as they did last week. And that may well be why the central bank in China brought forward this move in the 14-day repo. It was likely to happen because they're trying to target shorter-term interest rates as being their main way of conveying to the market what they want to do with interest rates. So 7-day and 14-day repo are going to become their main vehicles for telling the market how they want to change policy in that respect. They've got a couple of things they're trying to do here. One is they're trying to restrict the strength of the Chinese currency. They can't do much about dollar yuan. If the dollar is going to be weak anyway, the yuan will gain. But they can help to keep it as an underperformer against its regional peers. And we saw the fixing today. Once again, they pushed back a bit on what traders were expecting, particularly in terms of the rate against the offshore yuan, which is where a lot of the speculative trading takes place. So that's one move. They also want to steepen the bond curve. That may well be what the meeting tomorrow is going to be about. They want to show people they're going to be more active in the Chinese bond market. They've been pretty uncomfortable with this idea that very long-term yields are coming down almost in parallel with short-term yields. They would much prefer a steeper yield curve, a normal shape of curve that we have in most parts of the world. And the PBOC may well tell us more about how they're going to achieve that. Could be more intervention in terms of their day-to-day activity at the long end of the market. So that's something to watch out for tomorrow. Now, the byproduct of this is that equities in China can probably start to enjoy a bit more health. They've been in a terrible situation, underperforming everybody. But if the Fed is helping to lift the mood for risk assets across the world, maybe even China can get involved if the PBOC shows that it's acting as well.
Maybe even China. Yeah, the CSI 300 currently up just 0.6%. Maybe a turnaround for Chinese equities. What about the data? On the data front out of the US, the PMI is out later today, called stateside, Mark. Are we expecting this data to kind of confirm or at least give some support to this Fed move? How much sensitivity is there in markets to this data later?
Well, I think the way that investors are going to look at this is if the data comes out anywhere near expectations, it is going to show that the Fed didn't need to do 50 basis points. So that's going to add fuel to this very good mood that you've seen in markets. It's a very positive risk environment. So we're going to get the manufacturing PMI, which will probably be a slight improvement on the previous round. And we're going to get the services PMI, probably still showing a number around 55, something like that for the composite numbers as well. Now, these are not economic. This is not an economic situation that really requires any stimulus at all. The reason why the Fed have lowered rates is because they're more confident about inflation. But 50 basis points really is very, very generous. So the risk mood is already good. And if you see what's happening there and we get numbers in the PMI that reconfirm that the American economy is in pretty good health, then you're just adding fuel to the fire, basically. So this could be a very positive start to the week. The rest of the world is already in the green. We're having a good day in Asia, even without Japan. The currency market is in a pretty stable health as well. Bond market is fairly calm. So once again, it could be yet another trigger for more good news in the equity market.
OK, Bloomberg M Live strategist Mark Cranfield with an optimistic take on how the markets could unfold in the hours and days ahead as we look at green on the screen. Mark, thank you very much indeed. And the PMI data out of the US later today, of course, which will break for you. Now, a busy weekend for European politics with the new French cabinet unveiled late on Saturday. Meanwhile, in Germany, Chancellor Olaf Scholz narrowly avoiding defeat in state elections yesterday. We're going to get the details of the results from Brandenburg with Bloomberg's Oliver Crook joining us out of Berlin in a moment. Before we go to Ollie, though, Caroline Gonat is standing by in Paris. Caroline, talk to us about the cabinet makeup and the difficult choices this new government is looking to implement.
It may actually sound quite surprising after 2 weeks struggling to form a new government. Michel Barnier ended up picking a 33-year-old to replace Bruno Le Maire as the new economy and finance minister. His name is Antoine Armand. He belongs to President Macron's party, Renaissance. He was only elected MP back in 2022, then re-elected during the snap elections in July, and then heading the Economic Committee of the National Assembly. So very little experience for a huge task, which is to restore, of course, France's public finances. The deficit of France could reach as much as 6% of GDP this year, which is double than the 3% target that Macron wants to reach by 2027. French debt is at 3 trillion euros, a very grave situation, according to the Prime Minister Michel Barnier, who was on TV last night, saying again that it doesn't exclude raising taxes for some multinationals and for the wealthiest individuals. Other figures in the government include Bruno Retailleau, Interior Minister, Jean-Noël Barrot, promoted Foreign Minister. But that's assuming, of course, this government survives a possible vote of no confidence.
Yeah, and that is a key assumption, isn't it? And we know the challenge is certainly there for this cabinet. Bloomberg's Caroline Gonat on the latest out of Paris in terms of the makeup of the new French government, whether it can survive and whether or not it has to push through some pretty challenging tax increases as well. Let's turn over to Germany right now. Slightly more positive, at least on the surface, for the Chancellor Olaf Scholz. Ollie, talk us through the election results, the state election results of Germany and where it leaves Chancellor Scholz at this point.
Yeah, Tom, I mean, listen, on paper, this is a victory for the SPD and the Chancellor Olaf Scholz. Their party came in #1 in the Brandenburg election with 31% of the vote. Very close behind them, however, was the AfD. And going into this election, the reason it's significant is, one, well, Brandenburg is the sort of section of Germany that sort of encompasses Berlin. It's where the Tesla factory is. But it's also a place that has been held by the SPD since the reunification of the country in 1990. So if they were to lose that election and lose it to the far right, it would have been hugely significant. And the fact that they won by, 2 points is, yes, the sort of not the worst case scenario for them, but it's hard to say that this is a sort of clean victory. We should also say that this is an area that contains Potsdam, which is where Olaf Scholz's home constituency is. And it's maybe a region that has been doing a bit better economically, which is why it's perhaps not gone as far to the extremes. It's growing at about 2.1%. We should say it's also where the Tesla factory is. So it's been doing all right there. But it's hard to call this really a decisive victory for the Chancellor. I think that it is sort of falls short of the worst case scenario. And when we cast our minds forward a little bit to a year and a week from now, which is when the next federal election is, I mean, you look at the polls on the national level, it is looking very, very poor still for this coalition. You have Olaf Scholz not even in #2, the SPD. You have really the CDU as #1 and the AfD, the far right, going there in the second place. And when you look at kind of the other parts of Olaf Scholz's coalition government, the FDP and the Greens, neither of them had enough votes in Brandenburg to be part of the local parliament. So again, this is a very sort of difficult decision here and difficult time for this government. It's going to continue to limp forward, but I don't think this sort of silences, for the record, the conversation around who is the right candidate to lead the SPD into the next election, which is something we're going to hear about over the next 12 months.
OK, Bloomberg's Oliver Crook in Berlin on the implications of these state election results in Germany. Ollie, thank you very much indeed. Here's what else to be thinking about then, the day ahead. On Tuesday, so not today, of course, so not the day ahead for today, but on Tuesday. I'll tell you what's happening today as well. You're going to get the PMI data, of course, out of the US in terms of manufacturing and services. And as Mark Cranfield was saying, that could be important in terms of building out our understanding of that economy. On Tuesday, though, the UN General Assembly starts. So that will be in focus, of course, the politics, the geopolitics of Ukraine and Israel, no doubt front and centre as well. Then on Thursday, a central bank decision when it comes to Switzerland, the SNB policy rate decision. That's on Thursday. And on Friday, the Fed's preferred inflation gauge, the US PCE data, will be coming out on Friday. Will that support and give them justification in terms of the move lower on rates? And how will it tie in to market pricing around an additional 70 basis points of cuts being priced in by these markets between now and the end of the year? You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak Terminal. Subscribers can go to DAYB Go on the terminal. Coming up, strikes across the Israel-Lebanon border intensify as Hezbollah launches rockets into northern Israel. More on the rising tensions in the Middle East next. Plus, Danish Prime Minister Mette Frederiksen tells Bloomberg that Ukraine must be allowed to use donated weapons to strike deep into Russia. We bring you more from that exclusive interview later in the show. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, crossing the terminal right now, breaking lines in terms of an update in what is a fast evolving situation in terms of the conflict right now between Israel and Hezbollah. The IDF, so the Israel Defense Forces, have been saying that they have been conducting extensive strikes on Hezbollah in Lebanon. They have also said, relating to Gaza, the IDF saying that they do not rule out, the IDF does not rule out that the Hamas chief Sinwar has been hit in a Gaza strike. So the IDF saying and opening up the possibility that the Hamas chief Sinwar has been hit in a Gaza strike. Again, saying it does not rule that out. Also giving us detail in terms of stepping up the offensive, the Israeli offensive on those Hezbollah targets in Lebanon. Let's get more on the details again that are coming thick and fast from the region and the exchange now that we're seeing between Israel and Hezbollah intensifying. We're seeing that over the weekend as well. And bring in Jemana Besetchi, of course, our Horizons Middle East anchor and someone who's been following and charting all of this for us. The latest developments then and where this leaves the region, Jemana.
Yeah, another huge escalation of the course of the last 3 days. Friday afternoon, Israeli forces struck two apartment buildings in southern Beirut around the Dahia area. Later, it emerged, Hezbollah announced that 15 senior commanders alongside their top military commander, Ibrahim Akil, had been killed in those airstrikes. Ibrahim Akil, of course, had been wanted by the U.S. for over 40 years over his masterminding or participation in the masterminding of those U.S. embassy and marine barracks bombings in 1983. So he has been on this wanted list for a very long time. The Lebanese Health Ministry, however, also announcing that the total death toll is now 51 deaths, with 10 missing, and the deaths including 3 children and 7 women. Now, over the course of the weekends, what we saw was an intensification of airstrikes from Hezbollah into northern Israel, into Haifa. For the first time, they were shooting medium-range missiles. The Israeli military said Hezbollah launched about 150 projectiles early on Sunday and striking deepest into Israeli territory since the beginning of this war. And also over the course of Saturday evening, Sunday, and then late Sunday evening, Israel has been conducting airstrikes on southern Lebanon as well in its heaviest day of bombardment again since the beginning of this war. And just a short while ago, the IDF spokesperson put out a voice a voice message warning residents in South Lebanon to immediately move out of harm's way. Yesterday, we also heard from the Israeli Prime Minister Benjamin Netanyahu, who said, if Hezbollah don't understand the message, I promise them they will understand the message. So there does not appear to be any letting up in sight. Tom.
OK, Jemana Besetchi, our anchor, of course, of Horizons Middle East, joining us out of Dubai with the latest, again, on what is a fast-evolving situation. Jemana, thank you. Coming up, the Danish Prime Minister implores Ukraine's allies to step up and help Kyiv fight back against Russian aggression. More from our exclusive interview with Mette Frederiksen. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Denmark's Prime Minister says Ukraine's allies must allow the use of donated weapons for strikes inside Russia. Mette Frederiksen told us exclusively why she thinks Russia is a global threat.
From a European perspective, from an American perspective, and even from a global perspective, I think the result of all this is that we cannot let Russia win a war, and we cannot let Russia define the borders by an extremely aggressive war in Europe. Because if we let them do that, then all what we have tried to build since the end of the Second World War will be damaged. So that is my conclusion. And I think we need a shift now in the war to ensure not only that Ukraine will not lose this war, but to ensure that Ukraine will actually win this war.
Well, then what will determine that? What will make that? Can you guarantee that? Because it seems like the amount of force, military gear, manpower, all these sorts of things would be tremendously large to expel Russia. So I'm just trying to understand how you think about that problem.
Well, you're probably right. It will demand a lot, like it has been the case now for 2.5 years. I don't think, let me start another place. You can only have peace if you have two partners in a war who actually wants peace. Ukraine wants peace. I have visited the country several times. I know the Ukrainians are quite good now. They only have one wish, and that is peace and prosperity for their people. That's not the case with Russia. There's only one part who have started this war. There's only one aggressive part, and that is Russia. And I don't think you can have a peaceful solution when the one country that has been attacked wants peace, and the aggressive part wants the war to continue. And therefore, we have to be able to give the right answer, and it has to be powerful, unfortunately, because I would prefer peaceful time instead of wartime in Europe. My suggestion is let us end the discussion about red lines.
Okay.
And let us not delay what the Ukrainian needs, not only to protect themselves but also to push Russia back.
So on the question of whether or not Ukraine should be allowed without restriction to strike within Russia with donated gear, where do you stand?
It has, of course, to be according to international law, but from a Danish perspective.
Danish Prime Minister Mette Frederiksen. Now to some other stories making news this Monday. Citigroup's expansion plan in China is on hold after the Fed penalised the bank for data management and risk controls. We are told the bank was hit with $136 million in fines in July and ordered to prioritise risk issues. Citi hasn't yet received a clearance letter required by authorities to set up a securities firm in China. Bloomberg understands the US is considering rules that would ban Chinese and Russian-made software from connected vehicles. The new restrictions would prevent companies from hacking and collecting data on US drivers and sending it back to China or Russia. Officials aim to enact a final rule in January 2025. An REA Group has increased its offer for Rightmove, expressing frustration at the UK property portal's refusal to discuss a deal. The improved offer values Rightmove at £6.1 billion. The latest proposal is the third in less than 3 weeks from REA, part of media mogul Rupert Murdoch's empire. That's a stock to watch at 8 a.m. UK time. Coming up, we're going to be live at the Labour Party conference in Liverpool as the Prime Minister of the UK, of course, Keir Starmer, looks to sell his economic agenda. We're going to discuss what to expect with Kelly Beaver, the Chief Executive of IPSOS. That's next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. China presses the button on more stimulus. Asian stocks and US futures rise as the central bank cuts a short-term policy rate, with investors now hoping for more from a rare briefing tomorrow. Scholz dodges defeat. The German Chancellor's party scrapes a win in his home state of Brandenburg, narrowly holding off a surge in support for the far right. Plus, no return to austerity. The UK Chancellor attempts to lift the mood on the economy at the Labour Party conference. We are live in Liverpool. So, markets getting a lift from the story coming through from China. Those short-term rates have been cut by the PBOC, and expectations building around what regulators from the PBOC and the Ministry of Finance will be saying. Again, at that rare briefing expected, of course, tomorrow. European futures up by 0.4%. Here in the UK, the FTSE 100 is up 23 points. That's the direction it's pointing in, at least. S&P futures after a wake of gains for US stocks last week, and that 50 basis point cut, of course, from the Federal Reserve, currently looking to add around 15 points. Nasdaq futures also in positive territory, up 0.5%. Across asset, we're going to check in on oil and gold. Gold, by the way, at a fresh record high. Let's split the board because gold is up 27% year to date and continues to rally. 2,627 right now for the yellow metal. Bitcoin also rising in tandem broadly with US stocks, and we'll break that story down for you towards the end of the show. 63,000 right now on crypto. Euro dollar at 111 and $75 on Brent, up 0.7%, with the scrutiny, of course, still on that conflict between Israel and Hezbollah, with the lines crossing just in the last few minutes. Let's get back to UK politics, though, because UK Chancellor Rachel Reeves is expected to promise the government won't return to the austerity cuts of the previous administration. She is due to address the Labour Party conference later today. Our UK correspondent, Lizzie Burden, is on the ground for us in Liverpool. Lizzie, what more can we expect?
Yeah, good morning, Tom, from Liverpool. The warm white wine has been flowing, and it should be the opportunity for Keir Starmer to do his victory lap. Of course, this is Labour's first party conference in power after 14 years of Conservative rule. He's got this big majority, but it's been a summer of economic doom and gloom, at least according to Labour's narrative. And recent days have been dominated by stories of infighting at number 10 Downing Street and freebies as well. So here with me to take the temperature at Labour Party conference, I'm pleased to say that I'm joined by Kelly Beaver, who is Chief Executive for the UK and Ireland at the polling company IPSOS. Kelly, great to have you with me. We had Labour elected claiming to be more moral and fiscally responsible than the Conservatives. I wonder if the current polling suggests that the public still thinks that's the case now that they're in government.
Well, the public voted for change, and we now have over half of them who are disappointed with what they've seen from the Labour government so far. Now, it's not just some of the stories that you've mentioned about who's buying Keir Starmer's wife's dress, etc. It's largely to do with the overall mood of the nation. That expectation for change has been met with a lack of optimism, a lack of hope, and ultimately they are concerned around the economy. We've seen that rise up to the highest levels of economic pessimism we've seen over the course of this year, after a brief reprieve off the back of the election. And similarly, we now have over half the public again worried about the direction of travel for the country.
And how personally damaging have these stories about donations and infighting been to the Prime Minister himself?
So Keir Starmer's approval ratings, even going into the election, people were still relatively undecided about him. But unluckily for Keir, they're starting to make up their mind, and that is not necessarily in his favour. We saw a really high jump in the proportion of people who believe Keir Starmer is doing a bad job. That's now 4 in 10 of the British public. And just looking at the size of the jump that we've seen, it was 28 percentage points in people saying that as a rise over the course of the last month. When we polled Liz Truss before and after the mini-budget, the rise in dissatisfaction with her and her job was 26%. So this is quite a movement.
Yeah, so I was speaking to the Environment Secretary Steve Reid yesterday, and he said this is normal, this is just grinding the gears when you go from opposition to power. How long do you think that they can call this teething problems?
Well, so you do sometimes get what's called a honeymoon period. And I was reflecting yesterday and looking at some of this data and wondering whether the Labour government have decided to, do you know, like some young people do, they sort of postpone their honeymoon because they have big things that they need to to do first.
I did that.
Well, yeah, well, it makes sense, and a lot of people do that nowadays. There are big things that this government needs to tackle. Perhaps they are postponing their public opinion honeymoon. That's certainly what it looks like from looking at the polls today.
But do you think that this doom and gloom about the economy has unnecessarily shortened the honeymoon period when actually the data don't match up with the narrative?
So it is partly the high expectations of change that the public went into this election with. And subsequently, they're also looking, it's not just the economy. We also see, when you look across the 5 missions, the one where they're least happy and also think there's going to be the least progress is around crime. And bear in mind, we had the riots events as well in August this year, and that has played out in some of the polling and the reflections on the government's performance, but also what's really worrying the British public today. When you look at who's disappointed with Labour, a quarter of people who voted for Labour only 2 months ago are also saying they're disappointed with what they've seen so far.
So the preparations are underway, as we can hear, for the Chancellor Rachel Reeves' speech later on.
Yes.
What are her personal ratings like?
So again, she came in with a bit of a bounce and they have subsequently fallen back. It was the same for Keir Starmer and the same for the Labour Party as a whole. There was a slight uplift for Rachel Reeves off the back of the election itself, with new polling coming out at 10 o'clock today, which is why I'm not being so specific on that.
Oh, we'll have to look at that, Kelly.
Out very soon.
Are the Tories benefiting then from Labour's difficulties?
So if you look at the Conservative Party, the public themselves are not necessarily considering the Conservative Party in this point in time. So yes, Labour they are really up against it. Again, the public narrative is starting to shift. There's a sense of disillusionment. But when we ask about some of the potential leadership candidates, for example, for the Conservative Party, and we line them up about who would be a good Prime Minister, people are more likely to say Nigel Farage would make a better Prime Minister than any of those candidates. And Keir Starmer leads them all.
OK, so not even a Conservative, the front runner to be the next Conservative leader. Kelly Beaver, lovely to talk to you bright and early this morning. That's Kelly Beaver, Chief Executive of IPSOS for the UK and Ireland. Tom, back to you in London.
Yeah, Lizzie, that plummeting approval rate for Keir Starmer is quite something, isn't it? Quite marked, quite a standout stat coming through in terms of just how unpopular the Prime Minister is now in terms of his fall from grace, at least for now. Lizzie Burden at the UK Labour Party conference in Liverpool, who'll be there, of course, covering that speech and leading up to Keir Starmer's own speech, of course, tomorrow. Thank you. We'll be back, of course, at the Labour Party conference. Lizzie's going to be speaking to Lloyd's of London chair Bruce Carnegie-Brown. That's at 8:15 UK time, so an important pulse on the finger on the pulse of British business in terms of that interview. Now, wealth advisors and high net worth individuals have told Bloomberg the new UK government's looming clampdown on the rich has sped up emigration plans among some of the country's well-heeled residents. Some are simply cashing in UK investments, but others, from wealthy families to City of London bosses, have mapped out departure plans. This is the subject of today's Big Take. For more, I'm joined by Ben Staples from the Bloomberg Wealth team in London. Ben, a great piece of reporting by you and the team. Is this a Crimea River moment for Britain's billionaires, or does it point to a real challenge facing the Labour government and its attempts to keep the business community and their investment on track?
Thank you, Tom. Definitely the latter, I would say. I think it's good to point out Labour's got what we call a triple whammy going after the ultra-wealthy. We've got the change to non-doms, we've got the increase in private equity investments, and the addition of a value-added tax, 20%, to private school fees that can cost more than £55,000 a year. If you're ultra-wealthy, the private school fees aren't a big deal. What is the clampdown on going further than the Tories in the March budget on the inheritance tax breaks that non-doms get. For being here that they can obtain under the existing regime. That is making a lot of folks. It was a bit of, I would say, a mumbling or a rumour at the beginning of this year. What shall I do if Labour get in? Now it's breaking out completely out into the open, and folks are looking to leave to places as far-flung as Greece, Dubai, Monaco, Switzerland, you name it. There really is, I would say, a tipping point for Britain's relationship with the world's rich. It's been increasingly strained over the past decade, partly due to Brexit. It made a lot of European folks think, do I really want to base myself here, or can I? Now it's really changing. So this is a real challenge, I would say, or partly a challenge to Rachel Reeves and Keir Starmer's plans to raise billions from these folks.
Yeah, so a tipping point is how you describe it. What does this mean then in more detail in terms of Starmer's plan? We know they've been courting business and the wealthy to pump that investment into the UK economy. Does it derail that plan then, Ben?
I think you raise a fair point. There are supporters for what Labour are doing among the ultra-wealthy. John Caldwell, UK billionaire, came out after being a Tory donor as recently as 2019, giving to Boris Johnson's government. There are supporters of what Labour are wanting to do. However, the triple whammy that we describe, the money that they want to raise from that are meant to go into schools, to the NHS. But it's a basic sort of zero-sum game. If there are hundreds or thousands of ultra-high net worths leaving the UK right now, those people are spending money in this UK. Non-doms alone contribute more than 9 billion in taxes every tax year to our economy. So if enough of them go, you must be thinking that there are people in the Treasury thinking, oh, this might not end up exactly the way that maybe it was originally advised and envisioned. So I would say it would be very interesting to see what Rachel Reeves is saying, both today at her speech and what she is saying privately behind the scenes in the build-up to the budget. There's a lot of lobbying going on, both from the non-dom community and the private equity industry, because they are facing tax increases as well. And they have sent warnings privately to the Treasury as well to say, if this goes ahead as planned, there may not be as many of us as London as there were a year ago.
OK, Bloomberg's Ben Stupples on some great reporting. It is the subject of today's Big Take on what is potentially that watershed moment for the wealthy in the UK. Ben, thank you for the details. Now to some other stories making the news this Monday. Bloomberg has learned that Apollo Global Management has offered to make a multi-billion-dollar investment in Intel. Sources say the alternative asset manager has indicated it's willing to make an equity-like investment of as much as $5 billion in the chip maker. We're told nothing has been finalised and the size of the potential investment could change. That development, of course, coming with California-based Qualcomm said to be floating a friendly takeover of Intel in what could be one of the biggest ever M&A deals. Sources say Qualcomm has been speaking with US regulators and believes an all-American combination could allay any antitrust concerns. We're told also that Qualcomm hasn't ruled out buying or selling parts of Intel if that combination comes to pass. And TSMC and Samsung are reportedly discussed building new factories in the UAE to help satisfy soaring demand for AI computing. The Wall Street Journal cites sources saying executives from the Asian chip makers have visited the UAE recently to discuss major new operations. The Middle Eastern nation is aiming to become a regional hub and testing ground for AI. Elon Musk's social media platform X has backed down and agreed to comply with court orders in Brazil. A judicial filing shows that X has finally appointed a legal representative as required. Sources also say it's blocked accounts accused of spreading hate speech and fake news. It could end a months-long clash that resulted in a $1 million fine and a ban on the platform. Coming up later today, in focus, of course, here in the UK, we're going to get Euro area PMI out of the Eurozone. Of course, here in the UK, we're going to be focusing on the Labour Party conference, Rachel Reeves and the speech that Lizzie Burden will be covering for us on Tuesday. It is the German Business Climate Survey, so another test there in terms of the challenges facing the German economy, and we'll get an indication as to how the business community is feeling with that survey on Tuesday. Meanwhile, the United Nations General Assembly starts on Wednesday. We'll be covering that, of course, with the focus very much on the conflict between Ukraine and Russia and, of course, Israel and its continuing conflict with Hezbollah and Hamas. And then in the EU, the China votes around electric vehicles and tariffs. That will be consequential, of course, very much so on the trade basis between the Eurozone and China. And then the Swedish rate decision, that drops on Thursday. Meanwhile, the Swiss rate decision, as well as US jobless claims, durable goods and revised GDP for the US will be coming as well. On a Friday, the Euro area consumer confidence, but more importantly, arguably, is the Fed's key gauge, their preferred measure around inflation, which is the US PCE detail. Coming up, we're going to head to Berlin, where we're going to be joined by the president of the German Institute for Economic Research. We're going to get his take as the Chancellor, Olaf Scholz, narrowly avoids defeat in state elections. Stay with us for that conversation. Coming up next, this is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the German Chancellor, Olaf Scholz, has narrowly avoided defeat in state elections in Brandenburg. For more, let's bring in Bloomberg's Ollie Crook, who's on the ground for us in Berlin. Ollie.
Yeah, Tom. So listen, it's a major story here for European politics, but also for German politics in that small section of Germany, Brandenburg, which goes around the Berlin, which has, of course, been held by the SPD since the reunification in the 1990s, managed to hold on to it just narrowly. What does this actually mean for German politics? What does it mean, more importantly, also for the economy going forward? Very pleased to be joined by Marcel Fratzcher, who is the president of DIW, the Economic Research Institute here in Germany. I'd like to just begin with just kind of your reaction to the results here in Brandenburg and what it sort of means more broadly for the German government right now.
The result is a continuation of the polarization we've seen over the past few months, meaning the right-wing extremist AfD together with a new start-up populist movement by Sarah Wagenknecht, they basically have a majority, or at least a blocking majority. And that makes democratic politics more difficult. It's more difficult to form coalitions. And therefore, ultimately, the political paralysis we have been seeing over the past 2 or 3 years is becoming even more difficult and more entrenched than in the past.
So when we sort of see what happened in Brandenburg, what we saw in Thuringia, and we see from the other regions, is that what it's telling you now, that basically what we're seeing is going to be a sort of paralysis for the German government at a time when arguably the German government needs to do quite a great deal to get the German economy moving?
Yes, it's a continuation, and it's the basis is the German political system, which is based on proportional representation, which means you always have to have coalition governments, sometimes, as at the federal level, 3 parties that don't really fit together. That makes it very difficult. And now at the state level, you don't even have a majority, so there will be a minority government most likely. And I think the biggest problem for Germany today is not necessarily that the economy is weak and companies are going bankrupt. I think this talk about the sick man of Europe, it's exaggerated. The problem is really uncertainty, frustration, a sense of we don't know where it's going. And this is the sense that you see in Germany everywhere. And it's getting stronger and stronger with every political result.
But there's also a sense with the German economy that it's also an economy that was built for a different generation almost, in the sense that some of the formulas that has created huge wealth in Germany over the last few decades just isn't working anymore. What is the sort of correct formula for trying to get Germany into the 21st century and to really play to its own strengths?
I disagree. I think the German economic model has always been based on openness. Look, we want to export as much as possible. We want to tap those markets that are growing very quickly. And that is a very smart strategy, right? And the problem is geopolitics or geoeconomics, that you see the conflict between the US and China, that China and the US are becoming more protective or protectionist, and Germany is not coping with that well. And what the single biggest problem in Germany is not to have understood that the best way to protect its economic model is to strengthen Europe. And you have the opposite movement here, say, no, we don't want to engage more with Europe. You see the Draghi report saying, look, we need more investment, we need more common policy at the European level. And in Germany, most people say, no, stay away with that, we want to do our own thing. And I think that's the problem. The economic model, I'm convinced, is not the problem. It's really the disengagement from Europe. But
there are sort of issues around, say, for example, labor costs and energy costs. And again, so sort of trying to build all of that material to then export it to the rest of the world. Those are things that are sort of have been very supportive of the German economy past, which is sort of changing a little bit. How do you deal with that?
That's a tough transformation. And as you say, Germany's energy-intensive industry is very large. Germany never had a comparative advantage in energy. Now, as long as the transition to renewables, which actually will wean Germany off expensive fossil fuel, until that is complete, and that will take another 10, 15 years, it's a big disadvantage. But I think the mistake in the economic policy making is the attempt to cements the status quo ante, to keep the same system, the same structure as before. So that's preventing a renewal. So German government needs to let market forces work. Yes, some companies like Volkswagen have to shrink, they have to lay off workers, they have to consolidate. That's a necessary requirement for something new to appear. And if you look at German history of the past 4 decades, that has happened again and again, and so allowing that change is important.
Well, Marcel, Fratzcher, thank you so much for your time this morning. Give us your perspective on the election, but more broadly where it fits into the sort of conversation around the German economy going forward. What is required? A more nimble economy that can be reborn from its sort of old greatness into the next chapter.
Really interesting context. Bloomberg's Oliver Crook, thank you very much indeed joining us out of Blair. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's get a check in the context around the Fed pricing then, as markets increasingly price closer to 70 basis points of additional cuts by the end of this year, currently around 66, 67. So the yellow bars representing the month of November, which is the next decision, and then December. We have 2 more decisions coming through for the Federal Reserve, and in total, markets are pricing in, again, around 66, 67 basis points. So that includes another 50 basis point cut. Interestingly, Chris Waller of the Fed leaving the door open to that, suggesting that, yes, maybe another 50 is coming. Again, if the labour market data deteriorates further from here. That was the context he gave around that call. So we continue to monitor how that story is evolving, of course, for you. Now, some of that is tying into what's happening in the crypto markets. Let's flip the board because crypto has rallied alongside US stocks. You got those fresh highs last week in terms of US stocks and fresh highs in terms of Bitcoin as well. In fact, the correlation between crypto and the equity markets of the US, it's the most closely correlated it's been since 2022. So historically, the second most correlated moment in terms of Bitcoin and what is happening with the US equity markets, suggesting that the macroeconomic factors that impact equity markets are also impacting crypto as well. And talking of crypto, both candidates, Trump and Kamala Harris, have tried to court the crypto ecosystem. Most recently, Harris over the weekend as well, saying she'd do more to support AI and the crypto space. And that brings us to where we are in terms of the odds. The betting odds are both candidates, and that lead for Kamala Harris has opened up, again, 58 to 45. But a reminder that at the state level, the polls are showing that this is still a very tight race, of course. A reminder, later today, Japan's Prime Minister will be speaking at Bloomberg's headquarters in New York. We will bring you that live, 2:30 p.m. London time. The open trade is next. This is Bloomberg.